Welcome everyone to this two-part overview series on why I like gold, and the other part will be why I do not like gold, just to balance things out. I will try to make this brief. I will try to keep all of the arguments to an outline in this video. I may then uh, focus in on some of the slides because there is just so much to be said, but in this video it will be just an outline. So let's get started. So just a quick walkthrough of what's going to be covered in this video. I'm going to start with a preface, and then I'm going to cover the eventually bullish scenario, and then I'm going to cover the falling off a tightrope scenario, demand, and then the monetary reset scenario, aka stagflation, and then the unquantifiable bullish claims, and then a summary. So I want to preface most of this by saying it won't matter until it matters. A lot of these arguments are reasons for that why gold should be significantly higher, but I don't think it's going to pick up and it's going to get there until people want to put money into defense against these things. Many of these arguments have been the same, although escalating in severity for years. And based on the fact that there's a futures market, there's a lot of, I'm not going to say manipulation, but I'm going to say a lot of ways that big money can overrule conventional market processes. So, in my opinion, the most likely catalyst to eventually take gold significantly higher is the eventually bullish scenario where the dollar weakens, the US dollar, which is many think inversely correlated to gold. Once either the Fed reverses course because the economy slows, and some other stuff, I don't want to get into that, but if the Fed reverses course, cuts rates, starts QE4, whatever, or if the US interest expense gets to a point on the debt that it's causing significant issues, which some could argue it already is, but if it gets to the point where interest is greater than tax receipts, I think it might be obvious that there's a problem that's not fixable, which I believe we're already at the point, but it's not obvious, or it's not, people aren't worried about it yet. Let's put it that way. The other side of the eventually bullish argument is at present there is a insane amount of money short gold futures contracts, and this level of short or net short positions has only been last seen in 2000 or 2001 when gold was at the $200 level. And once the big money finally decided that they didn't want to be short gold and that they wanted to be long gold, the momentum carried it all the way from the 200 level to where it went. The next family of reasons why I like gold in the near future and longer future than that is the falling off a tightrope scenario. Basically, the way I see it right now, the supply and demand picture is very close to mattering, but based on the way the market mechanics are how work for gold, there's a huge, huge paper futures market that covers the physical market. And so people use the paper market to decide what the price of gold should be, and the physical market only for it's very deep, and I don't want to get into it, but the physical is the pricing of the physical is based on the paper. And at these prices of physical, the central banks all over the world, well, mostly in Russia and China, are buying gold. Even some European countries are buying gold at this price in US dollars. Meanwhile, the CTAs, traders, and hedgers are massively short futures contracts, even though they don't have gold. Now, if they needed to get their gold at a certain point to deliver on the futures contracts, which luckily they don't need to, they can just sell them and settle in cash. But if they needed to, there might be a shortage of physical gold. Now, this type of thing happened in Bretton Woods, London, with the London gold pool, but it easily could happen again based on the supply and demand. The other thing is the world's biggest GLD mine, that I call it, the ETF that tracks gold and stores gold, has an inventory of gold which has been draining pretty quickly over the past while. So I don't know what would happen if if the inventory ever got to a point where there was no gold left for people to just draw out at any time they wanted a delivery of physical. As I briefly covered in the previous point, on the demand side, many countries who are forced to make international transactions in US dollars based on it being the global reserve currency, have been starting to convert their US Treasury holdings into gold by selling treasuries and buying gold, thus putting pressure on the US Treasury. And if China, for example, ever decided to do this on a massive scale, that should theoretically drive the price up massively of gold and subvert the value of the US dollar, because the US would then have to pay significantly higher rates on their treasury if supply and demand uh, was actually implemented in the market and the Fed didn't just monetize the debt. But that's neither here nor there. Basically, central banks are turning US dollars into gold effectively. And my last point on the demand side is that the demand for gold is ironically far greater than the demand for gold. Now, this is a bit of a broken mechanic, and what I mean by this is there's basically the market cap of gold isn't big enough for the amount of money that wants gold. Now, the answer to this has been create futures contracts for gold that are settled in cash. So there's theoretically more gold, creating an infinite supply of gold. Theoretically, possibly, but apparently this isn't an issue, driving down the price for gold. Now, if this were to ever reverse, I would definitely want to own gold on that day. Do I think it's ever going to reverse? That's a different question, because I would say probably not. The next reason that I like gold is because I believe it will serve as at least a store of value in an environment where there is stagflation or inflation, meaning in an environment where the nominal value of money is decreased or increased, the price is drastically increased, that is, that gold should maintain its relative value. And I do think that this is a significant risk, not that it's necessarily being treated as one. And it should also hedge against hyperinflation, not that at the current way that the world is working, I don't think hyperinflation is nearly as likely or possible in the US as people seem to say, because of the US dollar being the global reserve currency. But it's possible it won't be in the near future based on some events that are taking place. But that's neither here nor there. So, yeah, that is gold as a reset protection hedge. Now, lastly, before the summary, some uh, facts or stories that I would say that I would call bubble fuel are the fact that there's been so much printing of money by central banks over the years, printing of money to buying bonds and inflating the money supply, basically. Um, that gold cannot theoretically be done with, and making gold real money. And there is, again, theoretically, a finite supply of gold, while there is an infinite supply of all this debt, seemingly, that's all over the world, that is way, way too much debt, and gold wouldn't allow all of that and all of the problems that it's caused, which I believe are more numerous than what people give it credit for. But um, so yeah, that's the bubble fuel. So to summarize the argument in favor of gold, one can just look at the system right now and see that A, there's too much money, and B, there's not enough money, ironically, to cover all the debts, which is going to probably lead to significantly more creation of money. And when you want to defend against that, you really need something that has, I don't know, something like 6,000 years of history and of retaining its value over time. And if you could find me something better than gold, I'm really open to listening. Anyways, everyone, thanks for watching. Please check out my video counter to this is why not gold, because I think that it is important to have a balanced look at this, because some of these arguments can point to infinite returns at limited risk, but it's important to realize the risk. Also, remember, nothing I say is investment advice. Make your own decisions, but this is merely my opinion. So just always do your own research. Have a great day. Please comment below. Let me know if you enjoyed, if you hated, interested in knowing. Thanks.